Welcome to the Friday edition of the Wall Street Crossover Show, sponsored by Admiral Markets, and with their market commentator Darren Sinden.
Good afternoon, Zach.
Right, another weekend and another deadline. Is that right?
It is. I mean, it's a bit like being in the film Groundhog Day, isn't it? Only we realise we're in it. Yes, another deadline. Some tweaking supposedly of the Greek proposals to the creditors. Whether it will be good enough to win them over remains to be seen. As you said before we came on air, you're of the opinion that whatever the Greeks say is not going to fly in Germany, and therefore we probably won't see a deal. And my view is that even if we do, how lending them another 53.5 billion euros, which we won't be able to pay back, it solves the situation is anyone's guess. Einstein famously said that the definition of insanity was repeating something continuously and expecting a different result, a different outcome.
This is totally in that bracket, isn't it? Really,
it is.
Well, let's. I'm sure it all will be revealed yet again on Sunday night. Let's look at the data released over the European session.
Yeah, I started with a number that actually came out before the European markets opened, but it was so off kilter that I didn't think we could ignore it. So the Australian home loans for May, so basically the amount of money that's been lent in new mortgages by Australian banks, it fell, the figure month on month, by 6.1%, a very sharp drop, and almost sort of 100% above the forecast, consensus forecast of a drop of 3.5%, and way below the prior month's level of modest growth at 0.7%. Not really sure what the explanation is, and I'm not.
Somebody needs to get back to the drawing board, I think, on the economics front.
Yes, I think that's what
economic calculations.
You could infer from that. I guess we shouldn't judge it too harshly on one number, one figure in isolation, but we should definitely be keeping a very close eye on any other lending numbers from Australia in the next month. And then staying in Asia, one of escaped people's attention that Chinese equities rallied by 5% for a second day. Another healthy round of state intervention seems the most likely reason for that. There were one or two buy calls for Chinese equities from the likes of Merrill Lynch and Fidelity as well, but with many of them still suspended in trading halts, it's hard to see what the real picture is. But nonetheless, the Chinese market's up 10% plus in 2 days. And in terms of a rally in equities, we saw a similar rally, not quite so meaningful, but a similar rally in Europe, rallying on hopes of a Greek deal that we discussed at the top of the programme. And as we said then, what we do know is that the Greeks are asking for a further 53.5 billion euros in financing over 3 years to tide them over. Draw your own conclusions from that. So you know what my views are. And then back to the economic data proper. UK had its balance of trade figures for May. Another feather perhaps in George Osborne's cap, as the number came in at minus 8 billion versus forecasts of minus 9.65 billion. So and the prior read of minus 9.3 billion. So UK exports picking up, and the economy improving, perhaps in line with what Mr. Osborne suggested would be the case in his budget earlier in the week.
He's obviously doing so well.
Well,
right. Next up with the movers.
Okay, European movers then. First of all, the insurance stocks were higher today. The likes of AXA in France up 3.6%. ING Group, which we mentioned yesterday, you'll recall, because remember this is a bank insurer, so I thought in both camps, they're up a further 3% today. And Generali, the largest Italian insurance name, up around 2.3%. Why? Well, Barclays has published a bullish note on the sector, raised target prices on AXA and many others, and separately Goldman's has a positive comment out on the UK names. And the Goldman story was basically that the regulatory authorities here are going to look quite kindly upon these Solvency II regulations, which that the insurance companies have to meet, and a more flexible approach from the regulators towards that is good news for the insurance names. And then Intercontinental Hotels, international hotel operator, up 3.15%. They've done a deal. I had to read the article about 3 times before I could really believe it. They've sold a single 503-room hotel in Hong Kong for around $938 million, whilst retaining a 37-year management contract. When you think that the market cap of IHG is around £6 billion sterling, that's a phenomenal piece of business to take in that much money and still retain the management of the hotel. If you could do that every day of your life, you certainly would. So I'm very surprised that they're not up a lot higher than that, but nonetheless.
Yes, people don't appreciate that particular way of operating, and it is because they get the best of both worlds there, and I think they've been doing that quite a lot. Or I mean, that's
they have. I mean, they've definitely been selling down the actual physical property side, trying to retain the management contract. But 938 million for 503 rooms. It's at first I thought it was Hong Kong dollars, but it's US. It's extraordinary.
Okay. Well, next up we have the M&A.
Yeah, okay. Well, just really a bit of an update to a sector that we've looked at time and time again in the history of the show, back to the US telecoms market, and just really to compare and contrast a couple of names that I would like to get together but haven't been able to so far. So T-Mobile announced it has added 2.1 million new subscribers in the last quarter to overtake Sprint to become the number 3 cellular carrier in the USA. In contrast, Sprint had its largest fall in 8 months on Wednesday. It was down 8.3%, and there are concerns now about the finances of the group and the cash burn. Viewers might recall that T-Mobile has been linked to Dish Networks as a possible takeover candidate for Dish, but the thinking now, I think, amongst quite a few American analysts is that that's a less likely a deal to go through, and that Sprint would be a better fit for T-Mobile. Fortunately, Sprint tried to buy T-Mobile in 2014 and had to pull out of the deal under regulatory pressure. So can they get together? Well, if they could, it would need a change of heart from the regulators, and of course that may fall foul of the forthcoming presidential elections, because notoriously in America people don't make big decisions ahead of an election, and they may not be in a job after the election, so they'll leave it for somebody else. And the question is, could Sprint wait that long? Why would the merger be a good thing? Well, Sprint's got 98% network coverage in the US, but doesn't seem to make much money out of its cellular subscribers. T-Mobile is very good at adding these subscribers and making money, and that's why they'd be a good match together. But we should have to wait and see.
Okay, and we're on to the data points, I presume, now?
Yeah, well, another very quiet day in the States. Really only one proper economic data point of note. Wholesale trade inventories for May. We're looking here for a read of plus 0.3 versus a prior read of plus 0.4%. This is one of those numbers where a lower number is better, and the reason for that is that a lower number suggests a faster moving economy as sales draw down on inventories, and so inventories have to catch up. So 0.3% or lower is good. A higher number than that suggests the economy could be stalling. Obviously, never take one number in isolation, but it's interesting to see what happens there in terms of the trend. And then probably even more important, although a funny time of day for the London markets, Janet Yellen is speaking at 5 o'clock our time. She's speaking in Cleveland, and obviously every time the Federal Reserve chairperson stands up to speak, the market pays attention. So, it'd probably be better if it was earlier in the afternoon for us in London, but people will be paying close attention to that as they end their business.
Is she really going to be saying anything big in Cleveland?
No, look, the Fed doesn't make policy pronouncements outside of its meetings, so no. But people just love to pick up on the semantics of anything that she says and try and read something into it. I think that's a bit of a fool's errand myself, but no doubt people will still be doing that. All
right, and finishing off with the movers and levels.
Yeah, so I've picked on Apple first of all as a pre-market mover, around about $121.45. That's ticker AAPL for anyone who doesn't know, up about 1.15%. That's better, but stopped bouncing this morning after it came under intense selling pressure yesterday and traded down to $119.22. Just note that the 200-day EMA line is not so far below at 118.35, and when it has broken that line in the past, it's sold off quite sharply. Has numbers on the 21st of July. I think the concerns really were about China, where obviously is the biggest and growing market for Apple, and that's why they sold off. And then moving on to Barracuda Networks, $32.36. I think that's BCDU, if my memory serves, down 17.2%. Pre-market earnings for the data storage and security firm were in line, but the outlook was very poor, and the markets responded accordingly. And I wouldn't be surprised if they got hit harder in proper trade. And then in terms of levels to watch today, as we said, European markets are better. So as far as FTSE is concerned, we've gone with 66.26 to the downside, 6,700 round number psychology again there for upside level. The DAX back above 11,000 now, so 11,176 we've picked as our downside level, 11,290. The upside, the DAX back above its 200-day moving average, so that's quite a key sign, I think. S&P 2044 to the downside, 2060 to the upside, and the Dow 17,530 plays 17,652 on the upside. What was interesting there, if you look at the daily candle charts, very high wave candles there, rejecting any move to the upside and closing very much towards the lows of the day rather than the highs. So although obviously we're expecting US markets to open better on China and Greece. And then currency wise, the euro is a bit better, 111.20 plays 111.94 against the dollar. The Aussie dollar surprisingly taking that home loan number in its stride and actually a little bit better. So 74.25 is our downside level now, and 74.96 the level to watch to the upside. The yen is weakening slightly against the dollar, so 121.80 on the downside now, plays 122.60 to the upside, and cable a little bit stronger, the pound against the dollar, so 154.30 to the downside, plays 155.08 to the upside.
So the markets in general looking forward to ending the week in a more optimistic mode, and also looking forward to some better news, presumably over Greece, but we can't quite believe it at this stage.
I think that's a fair summary.
But I suppose again, there probably was going to be some short covering ahead of the weekend anyway.
Yeah, naturally.
Position squaring.
Yeah, I mean, people, margins are being raised around the city ahead of the announcement, so people are bound to be trimming their positions on the back of that, if nothing else.
Okay, well, we'll see what happens over the weekend. Speak on Monday. Darren Sinden from Admiral Markets, thanks for the Wall Street crossover show today. We'll be back, as I said, on Monday.